Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We have a very special guest for you today. She's a certified mortgage banker, an author, an editor, an industry thought leader, and the list could go on and on. Please help me welcome back to the show, Leora Ruzin, VP National Sales at WRE. Leora, welcome back. It is great to see you.
Yeah, likewise. I always enjoy being on your podcast. So let's just get
Outstanding.
to it. We have lots to talk about.
We have lots to talk about. First, let's talk about the industry. What's going on? I know you've been traveling, you've been at conferences, you've been interviewing, you've been doing articles. So give me kind of your take, your pulse on where the industry is right now.
So I get to experience what's currently going on in the industry from a viewpoint that I've never had before, which is that of a business owner. So I really get to see things from a different point of view, not having an employer to really report to anymore. So I got to say, on a side note, I'm kind of digging it. But I have concerns about our industry. I know that we're going through a lot right now, lots of layoffs, lots of questions, lots of concerns. Just over the weekend, another large bank failed. And so, people are worried and there's justification to be worried for sure. And I just got done recording another podcast that's launching later next week. And we talked about, why is this downturn in the mortgage industry different from how it was in 2008? Why does it feel so different? Um, and I really truly feel like it's kind of a twofold thing. So back in 2008, we kind of sort of helped cause the crash, I guess you could
Yep.
say. This time around is completely different. We were like the one shining beacon of hope during the COVID crisis, and we found ways to keep closing loans and to keep helping homeowners even during a total lockdown. And now that we're on this perceived other side of the fence of COVID, and we're seeing, the downturn in the economy, we're the first industry to be hit. If you ask anyone who's been in the business, where are the jobs? We're all filing unemployment, where the national numbers don't really speak for what's going on in our current industry and our current environment. And same with tech companies. And so I think a lot of people who've been in the business a long time are just feeling jaded. I'm one of them.
Okay.
um, I got laid off twice last year, and it hurts because we're loyal to the companies we work for. We put our blood, sweat, tears into these companies, and a lot of times it's not reciprocated, and it's very evident today that it's not reciprocated, and it's difficult. And so people they're getting frustrated and they're tired, and some are just leaving the industry altogether because of this lack of reciprocal loyalty.
So let's talk about that a little because you say, let's talk about the different perspectives because to a certain extent, I agree with you. Loyalty is very hard to come by on all fronts.
Sure.
But let's also look at some of the numbers and say, how do we balance all of this? You
Hmm.
look at the reports from the MBA, the average IMB lost over $300 alone last year.
Hmm.
Well, we know that sure as hell is not sustainable.
No.
We know the cost to originate, depending on who you listen to, is anywhere between $11,000 and $12,000. Two-thirds of that, for most reporting, is from the cost of labor. So, how do we balance we need to be more loyal, we need to keep people working in the industry with we can't keep losing money. Why are people losing money? Why is the cost to originate? You look at all kinds of other industries, and technology has allowed them to lower their prices. Technology has created greater efficiencies. What are some of the things at play that you see in the industry that say, what can we do to better balance the human resources with those terrible numbers?
Right. And so it's a couple things. The first thing is a lot of these companies who are laying off employees made a lot of money during the COVID crisis, and they didn't use that money wisely. They didn't save that money. They didn't use that to adopt new technology. They didn't use it to enhance support for employees. And now that we're on the downturn side of things, they don't have any money. Well, they still managed to pay out all their executive bonuses, and they're still putting together big President's Club trips for their loan officers, and then at the end of the day, they're terminating underwriters and processors, and it that's why I don't know. That's why I'm frustrated because I've always been on the operation side of things. Have I been a loan officer? Yes. I understand that you need a loan officer to make things happen, but you also need operations to make things happen. And it just seems that when the chips are down, it's opposite gets left behind. And companies will continue to throw huge sign-on bonuses to top producing loan officers. And I just feel like that this particular formula is not sustainable. And this is why we're in a position that we're in now. Companies need to make better decisions with their money. They do need to adopt new technology. And if all companies that stick around when when the dust settles, if they do that, then yes, there will be a right sizing in the industry. It has to happen. But
Well,
after
and
that,
I'm glad you said that. And it's interesting coming from all the different perspectives because I've sat on the other side of the table too. And I was a former CEO. And in the downturn, I was a CEO during 2008 of a tech company where you've got to start making some of those tough calls and saying, we have too many people for the amount
right,
of business we're doing, the amount of deals. So that's why I think to your point, I couldn't agree more on it's really about being wiser about using your money. Tom or Jonathan Core used to say all the time that one of our problems in the mortgage industry is we use human spackle.
I say it all the time.
Rates are low. We can just throw a bunch of bodies at it. We don't care if it's efficient. We don't care. We have 4 CRMs. We have 5 LOSs. We've acquired these other branches.
Yep,
And it doesn't matter. And then soon as rates go up, volumes go down, it's a panic and we just start cutting. And to your point, can't just keep throwing bonuses at LOs, just like we threw bonuses or the industry threw bonuses at underwriters when we couldn't get all the loans through the funnel
yep,
during COVID. And
yep,
it's a problem. And I think one of the problems, let's talk tech. We're on the Fintech Hunting Podcast. And I
sure.
know you've been on the app side. You've got a lot of perspective. Why, why do you think we're having so much struggles with not using tech properly? Why isn't there higher user adoption? Why is the cost to originate rising and we're spending more on tech, but we're not getting more out of it? Give me some of your vantage points from there because you've been on that side of the fence. You've had to
Sure.
purchase, you've
I've
had
had
to
to
implement.
implement. Yes,
Yep.
I've had to train. So it's so multifaceted. So from the very beginning, if you don't have champions in every department when you are adopting new tech, and you don't have unity amongst your management team that this is the tech that we are to be using, if you have those outliers that continue to resist the technology, it's like a plague. They will spread that resistance throughout the entire company. And that's at the very beginning. So you have to get total buy-in from the top down, and you need to have champions in every department who will sing from the rooftops that this tech is amazing, it will work, but we have to use it in its proper form. At the implementation phase, if you don't have those same people part of the process, so they're the ones who make the decisions. They're the ones who will be running these loans through whatever tech you're implementing. If they don't understand it and fully adopt it and embrace it, and then you decide that they're your trainers, they're going to train wrong from the get-go, and you're going to implement wrong from the get-go. And so it really needs to start from the very beginning that it's the right tech, you're implementing it properly, you're making sure that the processes adjust to the tech as needed, and that you have the champions who will teach people and get them to embrace the tech. The other side of this is there are lots of people who are just set in their ways and they just won't adopt the tech. And I'm not saying this is unfortunate, but many of those people are top producers and they just do things their own way, and they're usually okay with that. But then
And the company's
further,
okay with it, unfortunately, right?
they
I mean,
are, because they're top producers and they don't want to lose their top producers. So who does this affect? It affects operations because they're getting loans that are not being set up properly because they're just top producers. They're just going to push the loans through. They don't care what process to use. And again, if I get a lot of heat for this, then that's okay. If I'm wrong, that tell me I'm wrong. But this is what I've experienced in my 16 years in the business is, and what is the saying? The top 80% of loan volume is from the top 20% of loan officers,
Right.
something like that. And so those are the people that are making all the money, but they're the people who are putting in all the loans that are incomplete or they're lacking or they haven't been processed properly or not adopting the technology to automate the process. And so eventually you just have to be like, okay, get on the boat or bye. I
Right.
don't
Or they
know.
go,
Like,
they move on. So that's part of
yeah.
the challenge, right? Because part of the ownership of, let's just say, ops, because you're using it as an example, is what can ops do better to get more buy-in, to get
Hmm.
greater user adoption? How can they get that top producer excited? Because there's two sides to every story, and you see a top
Absolutely.
producer saying, you know what? I'm producing millions upon tens of millions or hundreds of millions of dollars for this company. Damn, I've been doing it for a long time and I know what I'm doing. And why should I have to use this crappy technology or this other process that makes me jump through 50 more steps? And so, to your point, I think it's that balancing act of whether it's ops, whether it's the LOs and the producers, there's got to be more of a meeting of the mind to say, how do we find something that works for all of us?
Yep.
Get the feedback from those top producers to say, Leora, here's why I don't like that. I got to do 10 more steps before I can do this one thing. And if I'm going to close loans, I've got to have a decision within hours, not within days, or
Sure.
whatever the example may
And
be.
and I've definitely seen on the ops side where you have those same resistors. I've worked at some large companies who are really good at automating. Um, as an example, if you get a DU approve on a W-2 wage earner who's been at their job for at least 2 years, an underwriter should just go off a DU. And yet I've seen situations where underwriters will go in and start slapping on a bunch more conditions. And so the loan officers get frustrated because, well, we have all this automation. You guys are telling me I have a DU approve. Why do I need all of these pay stubs or why do I need all of these bank statements? And so there's definitely those underwriters who have a hard time letting go of manually underwriting a loan and just accepting that AUS is what it is and that we just need to move on.
And that's such an interesting point. I spoke on an underwriting panel at the ICE conference this year. And that's one of the challenges, right? Is on one side, it is the head underwriter whose neck is on the line for those
Yeah,
loans.
sure.
And their bonus is tied to those loans and everything like that. So they may go through and add more conditions, more this, more that, because they're almost looking for the perfect scenario. That doesn't help the company. It adds to the cost per loan, it adds to the
Absolutely.
time.
And
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 there's
unfortunately,
also
it doesn't reduce the repurchase risk either. So,
And then there's that balance of,
yeah,
do I trust the technology enough when it's my career, my bonus on the line? And I think that's where there's still some of that disconnect.
sure.
Technology is not perfect, the individual's not perfect, but we need to do a better job of leveraging the two to get there. Now, there's a couple of other things you and I could keep talking for hours, but I want to get to a
Yes.
couple of other points, right? So you're doing a lot of writing. You're doing a lot with WRE. Tell us a little bit about WRE, who they are, what you're doing for them. And then I have other questions on a bunch of other fronts.
So WRE or Weekly Real Estate News, we're kind of going through a rebrand right now where we're just going with WRE News. It's a news site and it's unlike a lot of the news sites that we see today. It used to be in the beginning just an aggregator of news from other sites, and now
Okay.
we have evolved into all of our content being 100% original. And our audience is exceeding 1 million subscribers, all real estate professionals.
Awesome.
And so our exposure is vast. It's huge. And we brought on Phil Hall as our new chief editor. I kind of got things started and then he took over. And he's putting together some amazing content that's really unlike anything you'll see from some of the other publications out there. And I do feel there's enough space for all of us here. And I have no, I love all of the publications out there because they each have a different niche that they really
Right.
focus
A
on.
little
And
different
ours is
audience.
different audience, and ours is very focused on the real estate agent journey and finding tools. Sorry, that's Bowie.
No
Finding
problem.
tools to help real estate agents become more successful, which in turn will help them build better referral partner relationships with loan officers, title companies, the whole nine yards. So we're always looking for new content. We're always looking for opportunities to partner with others in the real estate space. And so my job is VP of National Sales. So I'm looking for advertisers and companies that we can collaborate with to not only help us spread the word about what they're doing, but to help us grow as an organization and a trusted news source.
Well, and I think one of the critical things that I see is I do a lot of coaching. I talk to a lot of LOs. One of the things they struggle with is if they're trying to establish and build real estate relationships, right?
Hmm.
If it's a heavy purchase market, if they want consistent transactions, they've got to establish those, but they don't know what's going on in the minds of the real estate agent. They don't know what's taking place. So I think looking at news sources like the ones you're referencing and saying, hey, as an LO, as a branch manager, as a lending executive, I have a better pulse of what's going on that side. I'm going to be able to add more value to them. So I think that
Absolutely.
is critically important. So I want to make sure that you got that out there. How do people find out? Where do they go? What's the website? How do they get
Sure.
more information?
So what else is great about our site is it's free. You don't have to be you don't have to be a member per se or have some kind of affiliation with our organization to have access to our news. And the site is just wrenews.com. And again, it's free to sign up. And we even have it set up where whatever state you're in, we spit out regional news. And so it's just and from a sales perspective, we have the ability to generate ads that are geofenced down to zip codes. So we have a lot of ability to help companies spread their tech, spread their offerings, whatever it is that they're needing to do, with the understanding that your audience is going to be real estate agents, which I think is amazing because I don't think there's anything like that in our current market today.
So let's also talk. I think it was a post that you recently did, and this is a topic that I'm very passionate about too, is in a down market or in a changing market, what a lot of companies do, and we talked about it right at the beginning, they have to be fiscally responsible. They've got to
Mhm.
make good decisions, but I see them cut back a ton on their advertising and cut back a ton on their marketing. From
That
your vantage point, why is that such a mistake?
Because any momentum you have going into a downturn, you lose the minute you let off the gas when it comes to marketing spend and ad spend. What you need to do is get more pointed about how you're using your ad dollars and how you're using your marketing dollars. You have to get creative. You have to find ways to make yourself even more visible to your audience. The last thing you should do is become invisible. And that's what you do when you stop marketing, when you stop ad spend. And and if that means you have to, dip a little into another part of the budget to make it happen, then that's what you need to do because when you stop marketing and you stop advertising, you lose volume and that just makes it worse. And so, but for some reason, that's always the very first thing that companies do is they're like, okay, well, we're done marketing for the year. I'm like, well, it's
Right.
April, it's May. What are you
We're
going to
not going to go to
do?
trade shows anymore. We're not going to
Right,
do any ads. We just cut our marketing staff. And the way I always phrase it is you might as well put an anchor on your foot and you're just going to go down faster, right?
right.
The
Absolutely.
Our sales are down, our pipeline's not looking good. So I don't understand the knee-jerk reaction then of let's cut the activities that helps build up that pipeline. And I think the companies in a market like this that lean in, that embrace it, are going to be the winners. You look back
Yep.
in 2008, the top mortgage companies in 2008 are not really around much longer. Rocket wasn't number one, but they're up there now. UWM
Yep.
wasn't number one, but they're up there now because they leaned in. And now's a great time to grab market share, gain more brand
Yep.
awareness because you're getting your message out and your story told. Doesn't mean you don't have to be strategic. Doesn't mean you don't have to be fiscally responsible and make sure
Right,
that you're spending properly. But to your point, you can geofence, you can target, you can really understand who your niche is. So I think
right,
that's absolutely critical. And too many times when people cut that, they're shocked that their business is even worse off than it
right.
was when the market turned.
So if you're a lender and maybe you don't have a Christmas party this year and you use it to market instead.
Right. Well, I mean, those are some of the decisions that you have to make. And,
Yep.
I know the HR people listening to this will say, well, we've still got to build morale and all that. But those are some of the decisions you have to look at. Or we're not going to stop going to trade shows, but we're not going to send 15 people. We're going to
Right.
send 3 or 4 people.
And
We're not going to.
maybe we don't need the monster booth. We'll get a corner booth, or maybe we don't need to be the platinum sponsor. There's ways you can still be involved and not throw the entire kitchen sink at one thing and then your entire marketing budget is spent. And the thing about morale is it's hard to generate morale when you're having to lay off employees because you have no business.
Right.
So, you still need the business to get to pay the employees. And believe me, I'm all for morale. I've been at companies where they treat their employees like crap. Um, but there's ways to do that without spending money as well.
Let's
Shocker.
talk AI real quick, especially as it relates to marketing and advertising. What's kind of your take, your viewpoint on AI? Is it going to take everyone's job? Is it a useful tool? Where do you kind of see AI fall in the marketing and advertising realms?
So, both. I think it might take some people's jobs, and it's going to be those people who don't know how to use it and don't know how to allow it to implement their job, not take over their job. So, everyone's talking about Chat GPT and all these other, really cool AI tools and how content marketers are going to go away like the dinosaur because Chat GPT can just generate all the content you need. That's absolutely not true. So if anybody spent any time using ChatGPT, you can generate a story that sounds well. It sounds like it's articulately written, it's grammarly correct, and it's categorically false in its information. So I love using it because it helps get me started on an idea. It helps me jog my memory on different topics that I can talk about. I love it for like little quick social posts, but when it comes to writing long form content, it's just there to enhance my ability to write. It's not going to replace it. And so I think it's a little bit of both. I think it's going to take people's jobs who don't know how to use it or don't want to use it or are scared to use it.
Well, I think you make so many good points there because I think one thing that it's not going to replace is the subject matter expert in that area.
Hmm.
Like you said, if we're using it for marketing, can I get 50 million social posts? Yes. Can I have it create a bunch of email campaigns for me? Yes. But if I don't know the subject matter and I don't know how to ask good prompts to get great feedback, and if I don't know how to use that information then to find out if it's accurate or false, like right now, ChatGPT stopped at 2021 with filling up the database. So if you say,
Yep.
create an email campaign to help me attract new borrowers, it's going to say because of low interest rates. You're like, well, shit, it's not low interest rates.
Right. It's like
It's
because of COVID, it's
irrelevant.
like, yeah, exactly. And
Right.
I know there's a newer version coming out that's supposed to be able to dig into real-time information on the web. But even then, you have to consider the source that it's pulling from. And is that source accurate? So you can't just put something in Chat GPT and then automatically post it. You got to do your due diligence. You need to edit it. You need to, and this is where you need people like me who are content writers who know how to do this, which is why you still need marketing people. So see, it's a full
Well, and that's what
circle.
I keep saying because you and I both do the same. We're content experts. We help with marketing, and I think that's the critical component. It's just like a lot of people say, ChatGPT can write code. Awesome. I'm not a coder,
Me
so guess
neither.
what? I couldn't create anything worth of crap with ChatGPT using it to try to write code because I'm not a coder. I don't know
Right.
that expertise, and I think people thinking that, well, I don't need a marketing person. I don't need a marketing staff. I don't need that expertise. It's just wrong.
It is.
Now,
It is wrong.
maybe as the tools evolve, Maybe I don't need 5 people on the team. Maybe I can do it with 3. To your
Right.
point, it helps me get started. I can use it and it may save me 10 hours or 2 days a week for content creation because
Yep.
it gets the wheel greased. I can start using the content. I personalize it. So I agree with you. I think it is a tool. I loved your point about if you don't understand how to use it, if you don't know how to ask good questions, good prompts, you're the person who's going to get replaced by it. But the people that are going to win are the people that can leverage it.
Yep.
And there is cool AI tools for graphics, for creating social ads and posts and all of that. Wonderful tools, but you still have to have that knowledge base. Leora,
Yep.
you and I could keep talking forever. It has been so nice to finally catch up with you. Let's
Same.
end with 2 things. One, if people want to get a hold of you, if they want to find out more about what you're doing, about advertising and that, what's the best way they can get a hold of you?
Easiest way is to find me on LinkedIn. Just type in my name, Leora Ruzin. I think I'm the only one out there with that name. But yeah, that's where you can reach out to me regarding weekly real estate news or my company, Ruzin Creative.
Awesome. And then as we're ending, what do you see for the rest of the year? Where's the market going? Is it going to level off? Are things going to finally pick up before the end of the year? Is the recession going to hit and it's just kind of going to be a doldrums all year? Kind
Hmm.
of what's your take?
So my crystal ball's in the shop. So, don't put any money on what I'm about to say. But honestly, if we don't get a handle on the bank issue, things could get really ugly really fast. And that might be good for the mortgage industry, right? And especially not, non-bank IMBs, but it would be detrimental to the economy at large. And so, just this morning, after what happened with, First Republic Bank over the
Public.
weekend, for anyone who doesn't know, they were seized, and now JP Morgan Chase owns all the assets. Sorry, my cats are trying to destroy my house. Um, we're starting to see a runoff on regional banks today. So, what's going to happen with that? There's concerns about the debt ceiling, and there's so much going on in our economy right now. We're heading into another election year. Like I think that home values are going to start to drop. We're already starting to see
See
that in
that? Yep.
some locales. The rate of growth is slowing in home appreciation. I do see rates leveling off, but I have very large concerns about the economy at large, and that we are going to be going into a recession if we are not already in one.
Excellent. Well, I greatly appreciate your feedback. It was so nice having you a guest on this
Yeah,
episode of the Fintech Hunting Podcast.
thank you.